Welcome to our comprehensive guide for 2026 today. We are walking through the vital steps to ensure your Shopify store is fully VAT compliant in Europe. In 2026, tax regulations have become stricter. Proper configuration is no longer optional. It is essential to avoid heavy fines and ensure smooth shipping across borders. VAT is a consumption tax. For EU sales, Shopify uses destination-based calculation, meaning the tax rate depends on where your customer is located. Before touching settings, you must understand your registration needs. You might need a local VAT number in every country, or more commonly, the one-stop shop. If you are a small EU-based business with sales under €10,000 annually, you may qualify for the micro-business exemption. Crucially, for 2026, the customs duty exemption for imports under €150 has been removed. Utilizing IOSS is now vital for non-EU sellers. Now, let's go to your Shopify admin. Navigate to the bottom left corner and click on Settings. Then select Taxes and Duties. Scroll down to the Regional Settings section and select the European Union. This is the central hub for managing all your EU tax obligations. Choose your registration type. Most will select one-stop shop registration. Enter your VAT and ensure the effective date matches your registration papers. European consumers expect to see final prices. Go to tax settings and check the box that says all prices include tax. If you sell products like books or food, you might need reduced rates. You can create manual tax overrides for specific product collections here. For business-to-business sales, Shopify can automatically validate VAT IDs. This allows for the reverse charge mechanism, exempting cross-border B2B sales from VAT. Always test your settings. Add a product to your cart and go through the checkout process using different European addresses to verify the calculations. When it's time to file your returns, Shopify provides detailed VAT reports. You can find these under Analytics and then Reports, filtering by tax. To recap, register for OSS, configure your Shopify settings, and verify with a test checkout. This ensures a seamless 2026 for your business. Double-check your settings today. If you have complex needs, always consult a tax professional. Good luck with your sales this year. Managing a Shopify store in Europe is rewarding, but tax compliance can be a legal minefield if you aren't careful about the specific VAT rules. A simple notice from tax authorities can disrupt your entire business. Today, we cover the most common Shopify VAT mistakes and how to avoid them. The first major mistake is ignoring the €10,000 threshold. Many sellers believe they are exempt as micro-businesses indefinitely, but that changes quickly. Once your total cross-border sales to EU consumers exceed this amount, you must register for the one-stop shop or OSS to simplify your tax filing. Mistake number 2 involves incorrect OSS or IOSS setup. There is a huge difference between Union OSS, non-Union OSS, and the import one-stop shop. If you import goods under €150 without IOSS, your customers might face double taxation and unexpected fees at their doorstep. Next is mismanaging B2B VAT exemptions. Business customers expect to buy tax-free under the reverse charge mechanism, but Shopify needs specific settings for this. Failing to validate VAT numbers or forgetting the VAT ID field can lead to accounting nightmares and incorrect tax collection. For your business clients, mistake 4: product category errors. Not everything is taxed at the standard rate. Many countries have reduced rates for specific goods like books or clothing. Applying a uniform rate across all EU countries ignores local laws. You must map your Shopify product taxes correctly to each specific member state's requirements. Digital goods also cause confusion. For software and downloads, VAT is always based on the customer's location, regardless of where your business is based. Looking ahead, the 2026 enforcement updates are critical. New laws will remove the €150 duty exemption and tighten French import requirements. Stay ahead by using our Shopify tax compliance checklist. Ensure your settings are audited and always consult with a tax professional for complex scenarios. Don't let tax errors slow your growth. Audit your store settings today and ensure your European expansion is built on a solid, compliant foundation. VAT compliance for 2024 and 2025. Navigating the tax landscape has never been more critical for global success. As we enter 2025, European nations are aggressively modernizing their tax systems to close the VAT gap and streamline the digital economy for everyone. The centerpiece of this transformation is the VAT in the Digital Age Initiative, or VIDA. It represents a paradigm shift in how tax is reported. VIDA introduces mandatory e-invoicing and real-time digital reporting. This means transactions will be tracked almost instantly, reducing errors and fraud across the Union. The transition occurs in phases. From 2024 through 2030, businesses must adapt to localized requirements before the full EU-wide standardization takes full effect. Let's look at Western Europe. France and Germany are leading the charge with strict e-invoicing mandates, maintaining standard VAT rates of 20% and 19%. In Northern Europe, Estonia is making headlines. Their standard VAT rate is set to increase to 24% in July 2025, a significant jump for businesses. Finland is also adjusting, specifically focusing on reduced rates, moving them to 13.5% to stabilize the national budget and align with broader EU trends. Moving to Southern and Central Europe, Romania is increasing its standard rate to 21% while consolidating various reduced tax brackets for simpler administration. Poland and Hungary present a contrast. Hungary maintains the highest standard rate in the EU at 27%, though food and essentials often see specific exemptions. Switzerland, while not in the EU, is implementing new e-commerce rules in 2025, shifting liability to digital platforms to ensure fair tax collection. To manage this complexity, the one-stop shop or OSS system is your best ally. It allows businesses to declare VAT for multiple countries in one place. The Import One-Stop Shop, or IOSS, further simplifies things for sellers importing goods, ensuring VAT is handled at the point of sale, not the border. For smaller enterprises with a turnover under €85,000, simplified schemes are available, reducing the administrative burden while maintaining full legal compliance. In conclusion, digitization is no longer optionally, is mandatory. Staying ahead of these changes is the only way to protect your business's bottom line. We recommend consulting with tax experts and adopting automated software immediately. Here is your compliance checklist to get started for the upcoming year.